Welcome to the Modern Real Estate Investor Podcast, where we interview the biggest and most successful real estate entrepreneurs, investors, and capital raisers in the world to provide you with the tool sets, the mindsets, and the skill sets to help you conquer yourself, your life, your marriage, and use real estate as your wealth creation vehicle so that you can live a more successful, happy, and fulfilled life of growth and contribution. If what you're after is having it all, if what you desire is becoming the best version you can be across all areas, mentally, physically, emotionally, spiritually, sentimentally, and financially, you've come to the right place. We will bring to you the best of the best real estate entrepreneurs who will give you the insights, knowledge, experience, and skills so that you can go out and crush it financially and across all areas of your life. Grab pencil and paper, sit back, enjoy, and you are welcome to the Modern Real Estate Investor Podcast. Hello, Modern Kings and Queens. Welcome to another episode of the Modern Real Estate Investor Podcast, where we interview some of the most experienced and more skilled and knowledgeable real estate investors from around the world to provide you with the tool sets, the mindsets, and the skill sets for you to conquer yourself, your life, your marriage, and use real estate as your wealth creation vehicle so that you can live a more successful, happy, and fulfilled life of growth and contribution. Today, I have with me Dani. How do you say your last name, man?
Dani Beit-or.
Beit-or. Awesome.
Yes.
Yeah. Dani Beit-or, and he has over 20 years of experience investing in U.S. real estate. Dani uses his knowledge right now and experience to secure financial growth for beginners and experienced investors. And since 2004, Dani has worked on over 5,000 investment transactions, helping investors to build strong real estate property portfolios by investing in various markets. So Dani helps both beginners and experts by customizing an investing strategy to their own needs based on age, goals, knowledge, and financial ability. So, Dani, super excited to have you here, man. Thank you very much for your time, and you're welcome to the show.
Thank you very much. I'm very happy to be here, and thanks for inviting me to share and help your audience.
Awesome. So, Dani, the first thing that I do with my guests, man, is I ask them to walk us through their real estate investing journey in 75 seconds or less.
Wow, 75 seconds. I'd rather speak fast. So I started investing in 2002 as a young engineer living in Tel Aviv, Israel, understanding that locally the real estate market or the opportunities are not that attractive. Started looking outside. I felt very attracted to the U.S. real estate with the numbers, the return, the transparency, the sophisticated or advanced, I call it advanced real estate market. I can elaborate on that. And that's how I started buying my first rental property in 2002 while being an engineer in Tel Aviv, sight unseen, totally remotely, different country, different culture, different language, different time zones, different everything. And that was the beginning. And honestly, I fell in love with it probably right after doing my first deal remotely.
Cool. So you were an engineer, right? And you
Yes.
weren't in the U.S.? Where were you?
I was living in Tel Aviv, Israel at the time.
Oh, Israel. Okay.
Yeah.
And from all the way over there, you invested in your first deal all the way across the world in the U.S.
Maybe I should elaborate. Google was a startup at the time. No Zillow, no Redfin, no MLS. I think they were already. No public records online. No Google Satellite. No Google Maps. We used MapQuest. So totally no Facebook. No podcasts around. So very much. I don't want to say dark ages, but relatively to available. The available tools and data online today. I was in the dark ages. Period.
Damn. So how did you come across the deal, man? And can you walk me through that experience through someone told you, and then all the from the point in which you came across the deal, you got your knowledge about it, to the point that you invested into it. How did that look like?
So briefly, I'll say that some of the it kind of sounds like, oh, I found a deal and I went ahead and invested it. Well, there were probably 2 years before that, leading to that situation that I was looking for, or starting with realizing that realizing that just working for corporate Israel was not a way to prosper financially.
Yeah.
So I started looking for options. Basically, I wanted to leverage my salary and the time that I had, which was not a lot, and I started looking for investment stocks and options and different things. And kind of slowly, that within 2 years led me to the path of considering investing in U.S. real estate. And then I went and I saw one seminar about it, and then a second seminar about it, and then a third time I went and I brought another friend, and fourth time a different friend, just to get some ideas and feedback from others. So there was like an evolution of building myself towards the point that I'm choosing that direction. And now, when I was ready, it was just a matter of finding that opportunity. And there was someone that I work with who presented that opportunity to me. And honestly, it seems good compared to how I analyze properties today to 2002. It's a total different ballgame. That was very superficial back then, very detailed and informed today. But we still did. I still did the deal. It was an amazing one. Not planning on, it just turned out to be.
Yeah. So this reminds me of a quote. I don't know who said it, but it basically goes like this: um, formal education will make you a living, but self-education will make you a fortune, right? So you started to educate yourself, invest in yourself, time, energy, and money.
100%. Exactly.
Right?
You see, I mean, it's all autodidact, all learning, teaching myself, attending, spending time, evenings, seminars, courses. Because what I didn't say is, which you just summarized it so nicely. I felt as a young engineer starting my adult life after serving 3 years in the Israeli Special Forces and getting my engineering degree. I felt at the age of 23, 24, 25, around that time, that I am a real life finances illiterate. I know very little. I had an engineering degree. I learned economics in college or in university, but real life finances, I felt like I'm illiterate. So those 2 years were correcting that, and that's exactly what you said. Learning myself, teaching myself, investigating, asking, brought me to the point that I'm ready to invest and finding the opportunity. So there was a lot of ramp up before. It wasn't like, waking one day and like, here's a nice house, let's buy it. I wish, maybe not wish, but no. Yeah.
The next thing that this reminds me of is another saying. I don't know who said it, but it goes like this, right? You use the income from your job to fund your side hustle, and then your side hustle replaces your job, and then it funds your life, right? So
yeah.
You made your first investments right after a long time of getting informed, attending seminars, events, educating yourself, investing. You made your first deal. I mean, not your deal, but you pulled the trigger on investing in your first deal. And then how did your journey look after that, man?
So the first deal was obviously the most challenging one. After a year or two, I did very small investment, like more of a syndication, a fund. So it wasn't a huge financial burden, but that was just something that wasn't very exciting, but it was still kind of pushed me forward a little bit in that direction. The big turn, in a way, happened in 2004, where my wife and I just packed our bags and bought plane tickets and moved to the U.S. And I moved to the U.S. with only one thing in mind. I want to pursue real estate full time. So that's what I did. And I started, moved here, and that opened up more opportunities for me, and started doing that for myself. And at the same time, working with others, helping them, pretty much copy pasting what I was doing at the time.
So then, cool. So in 2004 was when you started guiding people to remotely invest in rentals and flips, so that they could, achieve financial freedom, right? So you started with flips and rentals, or how did you start?
I started with rentals only, long-term rentals only, for a few years. I think around 2009, I saw a need to generate, excuse me, more cash to buy more rentals. So I kind of came up with the formula that I will start doing what I call the short-term engine, flipping houses, in order to fuel the long-term engine, the long-term rentals. I did that for a few years. I did about almost 100 flips. Most of them were very successful. Few of them were just successful. About 10 of them were catastrophic. And after the catastrophic ones, I decided that I want to focus on the long-term ones only, and drop the flipping aspect, put it aside, or not.
Got it.
Put it, yeah.
So to buy all the rental properties that you bought, did you use your own cash, or did you raise capital from people? Or how were you able to
The way
accomplish
I've
that?
always worked is, for the rentals, I use my own cash because I was buying it for myself. The clients that I've worked with did the same, so the same model. For the flips, I would raise money from investors, and then I would put the sweat equity, and they would put the funding, and then we do some split at the end. So there was a
Mm.
combination depending on which approach. But with the long-term rentals, we have mortgages. Usually buy with mortgages. Everybody owns their own title, by putting their down payment. So without me raising for others or for my own deals, just using my own.
That sounds like an interesting model. So you need money, right, to put down for the mortgage, down payment, and all of that to be able to buy a rental. But if you don't have money, then you could raise money from people, put in the sweat equity, do some flips, right? Make lots of money pretty fast with flips, like faster than with rentals. Give money back to investors, and then use the money left, the profit, to invest into rentals. So
Correct.
is all of this? Do you teach the step by step of how to do all of this, or what is that
Not
you are
anymore.
focused on teaching?
Not anymore. I dropped the flipping aspect of it, or the short-term investing out of it out, and only focus on doing the long term. So that means today, and for many years, when clients come to me and they say, how do I expedite? How do I move a little bit faster? So typically, we look for different ways they can access funds, usually through different programs, sometimes borrowing, using their retirement account, using
Yeah,
their maybe some equity in their house, using borrowing against a stock portfolio, maybe partnering up, but not very common. But most importantly, what I've seen over the years, and this is something people tend to not uh, uh, visualize when they're starting out, is with long-term rentals. Many times when you start, it takes about 2 years for someone to get a sense like, okay, something is really happening here. And
yeah.
after 2 years, I call it the magic point where, okay, we hit the 2 years mark. Not necessarily things were amazing, but
You're not rich yet.
some but exactly, but at least you've seen that the past 2 years, some cash flow came in, some equity was built up, hopefully even a little bit. Some principal, mortgage principal was paid down. So there's some financial activity that it's not life changing, but it's like that moment that people, when I see from my clients, like, okay, this is interesting. This is something more beneficial than what I've done elsewhere. And at that point, they're two, usually a lot of my clients, when I see it, time after time after time, they're like, okay, if this is what happened to us in the past 2 years and I bought one or two rentals, and this is the impact after 2 years, now I can see that, all right, I need to accelerate. So either consciously or subconsciously, I see a lot of my clients starting to kind of zoom on the next property and prioritizing it. So the 2 year mark is very important to get the sense that, oh my God, it's working, even if
Yeah,
it's not amazing, right? And the 5 year mark is usually when things are starting to really pick up. Again, it doesn't always have to be like this, but in 5 years, if you have one or two properties, there's a possibility that I've already accumulated enough equity and cash flow to utilize it towards buying another property. Just so one property starts buying another property. So there's a like in startup, in many ways, there's a little bit of a like the hockey stick graph where it
yeah.
kind of starts slowly, but after maybe 5 years, one property is translated into two, and then maybe two properties into four, and then it starts kind of moving a little bit faster from that
Hmm.
point on. Again, it's not gonna boom like crazy. If it does, you're just lucky. But it's just something that I've seen again and again and again. So it does require patience. But if someone not trying to kind of go crazy about how do they buy more than one or two if they cannot, just be a little bit patient. It will most likely start accelerating itself.
So it's not a get rich quick thing. It's a get rich for sure thing, right? In the long term, right? Like
Not
it's
for sure, but yeah, go ahead. Sorry, go ahead.
yeah. So it might be a little bit slow, but I mean it works, right?
So Alex, I thought you're going to say exactly the terms I'm using. I call it from early on. I call it the get rich slow scheme.
Hmm.
So
Yeah.
that's the model I'm following. It's more of the slow and more not guaranteed, but more safe or secure or lower risk path to wealth. But it has with a one big disadvantage we as humans don't always have. You have to be patient. It will very likely pay off, but you need the patience. So it's more a little bit like an accelerated retirement plan. if you know to navigate it correctly. Doesn't, things can happen. You can buy a house and it can double in 2 years in value. That's not my formula. If that happens, you just, you bought the lottery tickets and it paid off. But if you don't buy the lottery tickets, it will never double. It will never double in value, even in 5 years, right? So that's part of it.
Yeah. Okay. So what are the things that can uh I don't have another word for this, man. But basically that can fuck up that 7 year process or 5 year process, and get and put someone off track in that get rich slow scheme.
Eh,
What some of the things that
Yeah,
can
yeah.
destroy it?
Excellent question. Excellent question. I think I know you even phrase it, perfectly. Um, so I think it starts with making bad decisions on the front end. And for example, um, I work with a lot of Israeli investors from Israel. And when I'm in Israel, I just got back a week ago. When I meet with investors in Israel, these guys who buy a lot of US real estate, they like to buy let's just say, the $180,000 house in not so good areas. Let's just put it this way. All right. To
Okay.
say, not to be uh, too vocal about it. So those properties have a tendency, not always, but have a tendency, the lower end properties, to be older, not in the necessarily the best part of town, attracting not necessarily the stable tenant and that actually usually it's recipe for lack of success. So maybe they're on paper cash flowing amazing or very well. In reality, they're having a hard time, holding on to tenants. There's a lot of turnover. They're older. There are a lot of repairs. Some of those older homes, when they have repairs, you don't just repair a thing. You have to bring it up to code. And then the client or the owner who's not aware that this is more of a intense investment path are losing their mind, and they automatically think the property management company is taking advantage of them because they're in Israel or they're in California and the property is thousands of miles away and they're just exploiting them, which is not necessarily, it could be, but it's not necessarily the case. And those houses tend to not appreciate as nicely compared to a nice single family home in the suburb, in a middle class area, that tends to appreciate very nicely, attracts certain type of renters that usually are able to pay. So the chances of you having issues, problems, repairs, etc., with this property, it's not that it's not going to be those things will present themselves. It's just how frequent and how problematic those situations will be. I always
Got
like
it.
to consider it. There's noise in the system. Do you want a
Yeah.
lot of noise in the system or do you want little noise in the system? It's not right or wrong. It's about how you present, how you conduct your affairs. But a lot of the times people are going and choosing those high noise properties, and that does not lead to what I just told you. So that would not meet the 5 years because
Mm.
it's not going to appreciate that much in 5 years. So that's
Yeah.
one thing. The other thing is people freak out. So sometimes properties do not perform as planned from day one, and all of a sudden we anticipated a certain rent and we're not getting that rent. It's a little bit below, or there's a little bit more repairs, and you need patience, you need resilience, and people automatically think it's a catastrophic. It's not a bad. It's a bad investment. They blame themselves. Sometimes they're looking for some other person to put the blame on. It's not me making the decision. It's the property management's fault, whatever. And then it turned out that maybe 2 years later, they decide to sell at breaking even, maybe a loss. And a year later, the house did very well, right? Just because
Yeah.
they had to. So hang in there. If it's catastrophic, maybe, cut your losses. But if it's not catastrophic, take a breather, put things in perspective, look at a bigger picture. Don't focus on the $500 repair here or another month of vacancy there. This is annoying. This is not pleasant. But what is the big picture here? If you're buying something that has a plan to do well, pay you back in 5 or 10 years, let it sit. Let it do it for you, and don't freak out over. Don't sweat the small stuff. It's easy to say from experience, but I see it all the time. And then when people sweat the small stuff, what happens? They rush to sell, and when you rush to sell, you're not maximizing. I have a lot of clients over the years that I call me for frustration, and they say, "Listen, hang on in there. Trust me, it will be okay. I know it's not perfect. I know it's not exactly, and even those situations are not that catastrophic. And then a year later or 2 years later, they call back and say, I remember you telling me to hang on. You're actually right. Things have been much better. Or we help them correct the situation just by doing some changes. So don't sweat.
Hello, morning kings and queens. At my company, Millionaire Network Automation, we believe in the power of networking. We believe that in real estate, your net worth is your network. This is why we help real estate investors raise capital by connecting them with their ideal investors and helping them build a massive network of their ideal investors in less than 30 days and with only 4 hours of work per week. If you're interested in this, click the link below in the description of this podcast to learn how you can propel your growth with a reliable system that will consistently help you connect with your ideal investors, build trust, add value, get your investors to promote you and put you in front of more of their investor friends, and raise more capital faster and in a much more effortless way so that you can achieve your financial freedom and still have the time and the energy to pour into every single other area of your life. So go watch the training, and you're going to have the opportunity to book a call to talk about how you can get this 100% done for you system implemented in the next 5 days. So thank you for watching, and I'll see you later, and enjoy the rest of this episode. Bye-bye. What about the cash flow, man? What about like the whether that's a small or large amount of cash flow that your property is starting to generate? Should you spend that or should you save that?
So in my opinion, if you are wanting to accelerate your growth and buy as many properties as you can as soon as possible, accumulate that cash flow as much as possible and allocate it towards the next investment. So that's just another way to generate more cash in your life so you can place towards your next investment. That would be my approach. If you're a little bit later in life, in age or position, and you're like, you know what, I have 20 properties or 15 properties, I'm okay. Then maybe use that cash flow either to pay down the mortgage and get it free and clear sooner, or maybe sometimes I like to see there you're kind of splitting it into 3 parts. One part is go have fun and have a nice dinner. One part, like a saving account for the property, like a rainy day account for the property, and one part maybe paying towards the mortgage. So there's different ways to go about it, but it really depends where are you in the journey. The earlier you are in the journey, the more cash hungry you are, the more you want to keep it and put it together into that bucket towards your next investment, your next property.
Okay, so that's why it's super important to customize every strategy based on your age, your goals, your knowledge, and your
Absolutely.
investing abilities.
Yeah, exactly. Very important.
Cool.
Right? The 60-year-old has a different mindset and time frame in mind, even if an experience, versus the 25-year-old who has a whole different mindset about investing and about the length of the investment.
Yeah. Okay. So so the people who listen to this podcast, Danny, are like some of them are active real estate investors, some of them are passive real estate investors, some of them don't know yet. Either way, every single person that listens to this podcast are people who have chosen to use real estate as their wealth creation vehicle, right? So, is there anything that you may want to tell that specific individual?
Yeah, I say, you know what? I'll say a couple of things. That first of all, if you are starting the journey, or even if you're in the journey of investing and maybe you get stuck, because people with experience get stuck, right, for one reason or another. So my suggestion for you is if you can sit down with yourself for 5 minutes, 10 minutes, with your coffee today or your glass of wine tonight, write down what is a qualified property for you, right? Like I said, it could be different between you and me, Alex, right? Different on finance, different on objectives, etc. What is a qualified? And when I say qualified, try to keep it simple. All right, it has to be at least 3.2, as an example. It has to be at least 1,000 square feet. It has to have at least 1 car garage. That's simple, right? It has to cost up to at least 150 or up to 250, whatever. It has to be no more than 40 years old, 60 years old, whatever. Write those things. You don't have to make it a perfect, but what I'm trying to say is I want everyone to take that list, the little cheat sheet, and outline what is it. If you looking at properties and you have this little cheat sheet and you see a property that either meets those criteria or exceeds them, that tells you you should move forward and consider investing in it. If it's not meeting there, or maybe completely out of that criteria, toss it around, don't lose time, and focus over it, because it's just gonna be discouraging or distracting. So a lot of people are just jumping. They don't even know what to look for. They're just looking at emails and signing for mailing lists, and that's very sad, because they just get, you know, paralysis analysis, get lost in all the information. And if you have that little cheat sheet, it will help you stay focused, because you take the time to define what is an acceptable or qualified property for you, and that will enable you to move forward. You don't need to perfect the list. You don't need to only put it. It has to be A schools, 1,900 square feet. That's crazy, right? Just start with a minimal threshold. That's number one. The second thing I will say is that a lot of people, I think, get lost over getting attracted to the cash flow only, or only to a certain amount. Um, I'm a firm believer, if you take one thing from this session, that if you buy quality and hold it long term, simple, quality, long term, you will do very well. A lot of people miss those 2 points, quality, long term. They go maybe long term, but piece of crap, or try to guide something, but maybe it's quality, but quickly get out of the deal. So do
Yeah.
those two things. Just by doing quality long term, inherently you're hedging against risk, against the economy, against those things that people are always in the back of their mind. So quality long term is two excellent way to hedge against those things, because when you buy quality in long term and the economy depends, that doesn't mean your house is necessarily suffering, right?
Yeah.
Or there's a very good chance it will recover rather quickly rather than slowly. So keep that in mind. Easier said than done for people, because I've been talking about it for so many years, and people like still buy crap short term. That's okay. There's no such thing as a yes or no. There's not I'm correct and they're wrong. It's just something that you ask for, what will help people probably succeed in the process.
Yeah, I think those were two incredible points, man. I really like the first one, right? And it reminds me of the importance of picking a niche, right? And defining who your ideal client's avatar is, right? So, for example, if
Yeah.
you're a digital marketing agency, and you don't have very clear as to who you're going to be serving, and you serve chiropractors, dentists, lawyer, and then you're just serving everyone, you're gonna be all over the place, and you're just
Right.
gonna get
Exactly.
analysis
Very,
paralysis, like you
very
said,
true.
right? and
Very true.
um
Agree.
and you won't be good at serving neither of them, right? But if you get really clear, in this case, if you get really clear on the type of property that you want to invest in, your reticular activating system will be on the lookout for those kinds of opportunities. You'll get really good at recognizing the opportunities, and then you get really good at going for them, right? And then the other thing, quality versus quantity, and
Yeah.
long term. Real estate is a long term game, man. So really like that. Um, so thanks for that. That great
Sure.
advice. So Danny, tell me about Simply Do It, man. Is that um an education company, or what is Simply Do It? Simply
Simply
Do
do it.
It.
Simply do it. My company has two main components or buckets. One is the truly the education aspect of it, real life, real experience, trenches, doing real estate, not theoretical real estate, actual issues and challenges. And, so when we work with our clients, we focus on teaching them and educating them, but it doesn't end there, because what do you do with that information? We help them also execute. So we have the bucket of teaching or educating, and we have the bucket of execution, and basically handholding our clients from start way, 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 way into the finish line. And the finish line is
Yeah.
not owning the property. This is not the finish line. People think that that's where our support end, or that's the finish line. Finish line is probably when you either sell the property, and even at that point, you may be selling and moving on to a 1031 exchange to other properties. So it may even move on, progress to the other additional properties. We provide support before, and directions and the guidance before you go into a deal, while you're making the offer and going through the transaction, when you get to closing, and support the clients with the issues and challenges and how to improve when you own the property. And this is ownership can be years, right? I have clients that
Yeah.
have been with me for 15 years or so. So that means it doesn't stop for us just because you purchased a property. because additional challenges during ownership with property managers, with tenants, with repairs will come up. And naturally, people call up and say, "Hey, I bought this house 7 years ago. It's accumulated 120,000 in equity. I want to sell it. Should I sell it? When should I sell it? How should I sell it? 1031 exchange, no 1031, all those good stuff." Yeah. So that's part of the journey. Is not just here buy this property. That's a very refined position of that. We see it as a bigger relationship if they want. We never force ourselves to make to dictate what the clients need to do.
Hello, modern kings and queens. I'm sorry for the interruption. I know you're enjoying the episode, but I have something super important that you must listen to. If you've been following this podcast for a while now, it's because of one of two reasons. Number one, you aspire to have it all, to unlock your potential across all areas of your life and achieve true freedom physically, emotionally, spiritually, sentimentally, and of course, financially. And or number two, you're a real estate investor or an aspiring real estate investor who has chosen to use real estate as your wealth creation vehicle to achieve financial freedom. My mission as part of the Modern Kings and Queens movement is to help as many people as I can achieve financial freedom using the vehicle of real estate. And I believe that networking can be an incredibly powerful tool to help you unlock your potential across all areas, but more importantly, financially, and more specifically in real estate. I believe that in real estate, your net worth is your network. This is why I created the 4-step capital raising networking system to help real estate investors propel their growth by using a reliable system that will consistently help them connect with their ideal investors, build trust, add value, get their investors to promote them and put them in front of more investors, and raise more capital faster and in a much more effortless way so that they can become successful, not only financially, but across all areas of their life. If this is something that you want, and this is something that you're interested in, click the link below to gain access to a training that will explain the 4 steps to building a high leverage network that you can use to raise millions of dollars in capital, propel your growth in real estate, and achieve financial freedom in a much more effortless way so that you can have more time and energy to pour into every single other area of your life so that you can become successful, not only financially, but across all areas of your life. In this training, you will learn 4 things. Number 1, aligned connections. I'll show you how to network effectively and how to make sure that your networking efforts work by leveraging a secret, little known concept called the cloak track. Number 2, networking tool. I'm gonna reveal to you a secret networking tool that the top 5% of successful real estate investors use to become successful. And I'm gonna show you how you can use it too to become successful and get out of that 95% of real estate investors that don't really make it. 3, high status communication. In order for someone to invest in you, they have to feel like they know you, like you, and trust you. A lot of people can communicate, but very few can connect. High status communication will allow you to build trust and add value in a way that will make people feel like they know you, like you, and trust you for years in a time span of 30 minutes. And lastly, the 4th thing is the attention multiplication machine. The world doesn't run on oil anymore. It runs on attention. And this last thing, the attention multiplication machine, will show you how to get wealthy investors to promote you and put you in front of more wealthy investors so that you can raise more capital faster and in a much more effortless way. So if this is something that interests you, click the link below to go watch the training. Make sure you stay all the way to the end. If you find value and you want to book a call to talk about how you can get this completely offhand system, completely done for you system, implemented for you in the next 5 days. So click the link below. I'll see you on the other side. And I hope you enjoyed the rest of your episode. Thank you very much. Bye-bye. Cool. And to get more information about that, you just simply could go to simplydoit.net, right?
Correct.
Do you have any other resources like events going on or webinars? I think you do, right?
I do every once in a while. We don't have a frequent, like once a month or anything like that. So we try to do a webinar. We have an internal webinar tonight to our clients. So it's not open to the public. It's only for our clients. Sorry about that. But we are probably doing something once a quarter, webinar wise or a lecture. I actually did 3 in the past month, but that's a lot with the Israeli groups.
Yeah.
But in the US, yeah, absolutely. So yeah, we have simplydoit.net. We have properties that people that we are considering buying or buying on our secondary website, which is reistart.com. Reistart.com. That's also a secondary for one. And then a little bit on social media and YouTube and stuff like that. And honestly, this has been mostly where I'm speaking these days on podcasts. That's my favorite. That's a great avenue, and that's kind of where most of my time been, talking about real estate in the past probably 2 years or 2 to 3 years.
Nice. Okay.
Yeah,
You have a podcast, right? The like
I
Simply Do
do.
It podcast.
Yeah.
Can you tell me about it? Do you interview people? What is it about?
So my podcast is very much uh, more putting educational messages out to our clientele. We do have guests maybe once a year, something like that. So we don't normally do that just because of, I don't know. Mainly it's mainly a way for me to put educational message out. But every once in a while we have someone that we think it's a good value. Absolutely, I've had guests over the years, but it's 99% me and 1% guests. So definitely something interesting. Definitely work with value to others. Absolutely worthwhile.
Great.
Yeah.
So I'm curious. How come? What make you take the decision to like stop? Or I don't know if stop is the right word, but focus just on rentals and stop the flipping and raising capital and all of that.
Yeah. So what I found with the flipping, I think there's inherently a lot of issues with flipping that kind of discourage me from moving forward with that. So first of all, if you really want to make a substantial return on a flip, normally it means a bigger renovation is needed. So that means if you do a small flip and you spend, I don't know, $30,000-$40,000 cosmetically, and then you flip it and you earn 10 or 15, okay, I'm not, it's fine, but it's not life changing, or I need to do, I don't know, 6 7 of those in order to get to the point that I save up enough for my next down payment. So it's not, almost not, I don't want to say not worth it, but it's not generating as cash. If you do a bigger flip, let's say 80,000 $100,000 renovation, the level of complexity is not 5 times more or 3 times more. It's actually 16 times more, because now you have more people involved, a GC, multiple vendors, permits, subcontractors, inspectors, etc. So the complexity, the more people are involved, the complexity more than quadruple. It's 16 times more, and all of a sudden you have an illusion that because you are the owner or you are the money holder, you control everything. And then every time you deal with a GC, they don't have a control over their own teams, their subs, etc., because one is sick and one is this and one is this. There's always excuses. So many cars tend to break for subcontractors. It's unbelievable. It's like an epidemic.
Yeah.
So it makes it super complicated, and you feel you can actually control it, and it's super hard to control it. Inherently, almost always you deal, or many times you deal with not the best of people in terms of values or quality and stuff like that. So it's you're dealing with the human element that it's not very pleasant to deal with, or that knows to adhere to budget or timelines. So a lot of complexity, a lot of moving parts, multiple entities involved. And then all of that, if you are successful and you made money, it's a short-term capital gain. A big portion of it goes for taxes. So all of that risk, all of that noise, all of that hustle, and then so much is even paid. So the government is your partner on that because it's a short term. Then I started questioning: is it really worth the risk, the time, the unknown, the hustle, the headache, the fun people that I have to deal with? And then, if everything works according to the plan, the government is taking a substantial part of it. So I came to the conclusion that I just rather do smaller renovation, the BRR model, long-term rentals, there are not as crazy. They're not as catastrophic in terms of so many people, and they're more streamlined. So personally, for me, I just felt that the positive tune that this is a lot of money and quick is not really the reality.
Got it. So for
Yeah.
anyone out there who it aligns with your vision and your values and your beliefs and would rather take a safer bet, right? And go on a journey where it doesn't require that much work, right? It doesn't require that much like noise, that much hustle, right? And it's a little bit more long term, and they would rather do that rather than like fixing and flipping and going and coming, right? Anyone For anyone out there who resonated with that and may want to learn more about investing in long term rentals, where would be the best place for them to find you, Danny?
So if you just write simply do it real estate or Danny online, this is like my web identity. We have 450 videos on YouTube, something like that. We have, I don't know, 150, maybe more episodes on the podcast, all content, all teaching, all talking about different aspects. So there's a ton of information that we put. I'm not very good as salesperson, so they're not full of pitches and come work with us. And here's a 5-minute tip and then 35 minutes sales pitch. That's not our style, my style. My style is teach and provide and share and realism. It's not all, it's not all Instagram and Facebook posts that everything looks amazing. It actually talks about the challenges. It actually break things into reality, and it updates because, for example, I just had a conversation with one of my lenders yesterday, and we are seeing a different way how lenders are determining
Operating?
the interest rate these days.
Yeah.
So something they have not seen before. They're actually using some not tricky method, but just for example, on the same, let's say on the same street, if you have 3 houses, one next to each other, one for 200,000, one for 300,000, one for 400,000, and you are the borrower with the same terms or the same profile or credit, you will get different rate on all those price points. So it's kind of surprising. The 400,000 is a little bit higher, the 300,000 is a little bit lower, and the 200,000 is actually in between the 3 and 4. So it's kind of the 300 turned out to be the sweet spot. Now, that was not something we've seen months ago. It's kind of a new thing in the lending industry that we're seeing some tweaking based on the price. So all of a sudden, pricing dictates the rate, not just the profile, not just the debt to income ratio, not just the LTV.
Got it. Well,
Yeah.
Danny, it's been great. I've learned a lot. I've had a lot of fun looking into your perspective and how and your view of the world. It's been very fun. So, any last words for the audience?
Say again?
Any last words? Any last message that you may want to share?
No, just don't hesitate don't get stuck on paralysis analysis. Pull the trigger and be successful. It's be patient and be successful. And thanks for having me,
Awesome.
Alex.
Thank you, Danny. I'll see you later.
All
Okay.
right. Thank you. Bye-bye. Thank you, everyone.
Thank you for listening to the Modern Real Estate Investor Podcast. We want you to know that we love and appreciate you, and we're super grateful about being part of your journey of becoming a successful real estate entrepreneur and having it all. Please share this episode with a friend who you think will be impacted positively. Send it to someone who you know is interested in real estate and dreams of having it all and being the best they can be across all areas. And if you thought this episode was really valuable, share it on your social media as a post or a story. We have a special gift for all of those who contribute to the Modern Kings and Queens movement. So for those of you who decided to share this episode and help us spread our message, send me a message letting me know on any social media platform at Alex Ramirez, the Modern King. I have a special surprise for you. Thank you for watching, and I'll see you later.